A couple of central banks on interest rate meetings this week, both on Wednesday the 13th. First is the Reserve Bank of New Zealand. It's expected to raise rates by 50 basis points to 2.5%, back to levels not seen since 2016. The RBNZ was amongst the first central banks to start raising rates. Up to October last year, the bank's official cash rate was at 0.25%. This expected rate hike this week will be the sixth in a row. Quick update on where we are in terms of the New Zealand dollar. Now, this is the New Zealand dollar against the US dollar. It's very similar against the Australian dollar. So you'd be trading this the same sort of way. If you think that there's going to be a more aggressive attitude from the New Zealand central bank, then obviously you'd want to see it break this line of support at 61.24. If it's a little bit less hawkish in its rhetoric, maybe we might see this line of support at 61.24 being held up. Then later on the day, on Wednesday, 3 p.m. UK time to be precise, the Bank of Canada will issue its interest rate decision. Now, it began its hiking process a little bit later, but ranks as one of the highest rates in the world's main economies. Economists see a rate increase of 75 basis points this week from the BOC, which would take the bank's overnight rate to 2.25%. Up to January this year, the central bank in Canada's rate was at 0.25%. So we've seen 200 basis points in 6 months, which has been the way in which the Canadian Central Bank has chosen to move with interest rates. Let's take a quick look at what's happening with the dollar CAD. We've seen this almost sort of triple top pattern forming here, capping out at 130.78. In today's session, we've got the US dollar rising against the Canadian dollar, but the same for the RBNZ. If you get an aggressive, hawkish Canadian Central Bank, could we see this line of 130.78 defended and further downside to go? We'll have to see what happens with those two interest rate decisions on Wednesday this week.